All right, good morning. It is Thursday, the 19th, and it is bank holiday on USD. We also have high impact news coming in at 1 p.m. close to New York Open, but we'll have no New York session today as it is bank holiday for USD. So even though it's bank holiday, I'll still be looking for a trade. The trade that I'll be looking for will just be a lower probability trade. Because there will be lower volume in the market. Okay, so let's do my analysis. Right, so continuing the trend of yesterday, we're still bearish. Created new lows throughout Asian session. And yeah, it doesn't seem like this trend is going to stop anytime soon. It could, possibly today. If we don't get any movement in the market today, we could see a consolidation range, which could result in the bottom of this downtrend, and we could start seeing an uptrend for GBPUSD. Okay, so this is my high on the 1 hour, my recent high. So for me to take longs, I'll wait for price to close above this level. And for me to take shorts, I'll wait for price to close below this level on the 5-minute time frame. So let's mark up our time frames. On the 4 hour, we are bearish. On the 1 hour, we are bearish. And yesterday, when I did my analysis, we were bullish on 3 time frames, and they were the 15-minute, 5-minute, and the 1-minute. And I did end up taking longs because we cleared the 1 hour highs, but considering that the 4 hour was not bearish or bullish with the rest of the time frames, it did make it a lower probability trade. Because even though most of my time frames are going in the same direction, if your highest time frame is not aligned, then you'll still more than likely not find a high probability setup. So for now, what I'm gonna do is I'm gonna wait for price to close above this level or this level. So above the red line, I'll be taking my long position, and below the red line, I'll be taking my short position. And as of right now, we are also bearish on the 15-minute. And then on the 5-minute, we are also bearish. I don't really count moves like this as recent highs, as it's just one candle. So this is also my recent high. So this is actually a pretty important level as of right now, because it's the recent high on the 1 hour, it's the recent high on the 15-minute, and it's the recent high on the 5-minute. Meaning that if price closes above this level, we'll probably see a fairly strong push up towards the highs, new highs. And then the 1-minute is going to be, let me just write down, 5-minute is bearish, and then the 1-minute is bullish. But the 1-minute does not matter as much. I only use the 1-minute for my added positions. So for example, let's say I took a position right here, and I take my entries on the 5-minute. So if I took an entry, let's say right here on the 5-minute, then I'll jump down to the 1-minute and add my positions using the 1-minute. Now let's say I sold this retracement and it closed above, and I'll take a position here, put my stop using the 1-minute, and put my target at the same level as my original target. So that's my only use for the 1 minute, is using it to add positions, because I usually get more accurate entries when I use the 1 minute to add my positions. And because if I use the 5 minutes, sometimes what might happen is we might hit my take profit or my stop loss within 5 to 10 candles. And that's only 25 to 50 minutes. And it's not a lot of candles to go off of on the 5 minute. So instead, I can jump down to the 1 minute, where instead of just seeing 5 to 10 candles, I see an entire trend forming, higher highs, higher lows, things like that. That gives me potential added positions, because we actually have market structure. It's not just candles, we have market structure to go off of. So we have recent highs and recent lows that we can use to add my positions. We have lows that I can use to trail my stop loss, or highs to trail my stop loss. So that is why I use the 1 minute for my added positions, and the 5 minute I use for my original position, because I found that if you use the 1 minute for your, especially if you also include the 4 hour and 1 hour in your strategy, then if you use the 1 minute for your entries, you'll have inaccurate entries like 70 to 80% of the time. I could never find good entries, and I would always be in drawdown as soon as I entered. Price would immediately reverse and go to my stop loss. Sometimes it might not hit it, of course, but I just never got accurate entries on the 1 minute, because there's so much noise in the market. I mean, if you look at this, for example, if you had decided to take a position on this break of this high, so, you saw price broke above this high, we broke market structure. So you can consider that we are bullish right now, and you decided you want to take a long position here. You put your stop loss below these lows, and then look at that. You immediately got stopped out. Immediately. And then price started going in your direction. And that's what happened a lot of times to me, using the 1 minute for my entries. I mean, if you use the 15 minute as your highest time frame, then you'll be fine using the 1 minute for your entries, because like I said, I use the 4 hour and the 1 hour as my high time frames. So I cannot use the 1 minute for my entries. I'll be very inaccurate with my entries, because the 1 minute gives a lot of false breakouts, whereas the 5 minute is less likely to give false breakouts, in my opinion. And it has proven that to me in the last few years, where I've seen that the 1 minute is just like so much more accurate than, sorry, the 5 minute is so much more accurate than the 1 minute with entries. And then, yeah, because I've already gotten my entry, if price starts to go in my direction, clearing the recent highs, retracing and clearing the recent highs. Let me show you, for example, like this. I entered, price pushed up, retraced, and then closed above the highs. Then I'll add a position here. So now, because I already had my entry on the 5 minute, because we had confirmation. So I didn't just enter for no reason. I entered because we had confirmation that we're going in that direction right now. So now I can jump down to the 1 minute because I already have my confirmation. So now I can jump down to the 1 minute and use the 1 minute to add my positions, which also gives me a bit more accurate entries, just because of the fact that we already have confirmation on the 5 minute. So our higher time frames already confirmed this. So now the lower time frames will just follow. So that is my basic reasoning on why I use the 5 minute for my entries and the 1 minute for my trailing stop loss and my added positions. But enough of that. So I'll just summarize what I'm looking at and what I'm waiting for. So we're bearish on the 4-hour, and as you can see with the wicks starting to become larger on the 4-hour, it's possible that we might see a reversal. Also considering that, look at the 1-hour, we are pushing up right now, and we've failed to close below these lows and continue the trend. So if we close above this red line on the 5-minute, I will take a long position. And if we close below this low, below this red line on the 5-minute, then I will take a short position. But as of right now, it looks like the long position will play out. But it will still, what you need to keep in mind, this long position is the lower probability trade. So out of these two potential trades, the short position is the highest probability because all of my time frames are bearish. But the long position is lower probability because look at this, 4-hour, 1-hour, 15-minute, 5-minute. I mean, all of my time frames are bearish. So I'm gonna enter only when the 5-minute has confirmed bullish market structure. So that makes it extremely low probability because 3 of my higher time frames are still against me, against my direction, which means it's sort of just the percentages go against me. A trade like this, you'll probably lose like 65% of the time, but I'm fine with that as I only need a 28% win rate to be profitable. So that is fine with me. That is why I'm fine with taking low probability trades like this, because my average risk to reward is 2.51. So I'm good in that department. But for now, that's about it. Like I said, long position above here, short position below here. Yeah, that's about it. That's what I'm looking at.